When you're first starting out in commercial real estate, the size of the companies that you work for can have a big impact on your experience and ultimately your exit opportunities when you're ready to move on. Starting your career in the industry at an institutional brand name organization can have massive benefits for you over the long term, but the experience you'd get at a quickly growing startup can also give you some really unique opportunities that even a company with hundreds of billions of dollars in assets under management wouldn't be able to match. And depending on where you want to end up, starting your career at a big company will take you on a very different path than starting your career at a smaller, more entrepreneurial firm, and your skill set, your resume, and your network in the industry can all be substantially different depending on the route that you choose. So to help you get clear on where you want to head next and whether you should be targeting big established firms or smaller, quickly growing companies, in this video, I want to walk through the main differences between working at a big brand name shop and a small entrepreneurial organization, and where you might want to start your own commercial real estate career based on your long-term goals and aspirations within the industry. So let's start this video out by talking about what it's like to work at big, established commercial real estate firms first, and I would categorize these as companies with over about 100 employees that have usually been around for 10 years or more. These tend to be the well-established, successful investment, brokerage, and lending shops with a proven track record and extremely strong brand names that are highly regarded throughout the entire industry. And for you, as a new entrant into the space, having the credibility of a big institutional firm on your resume can have a lot of benefits, especially if you're trying to build a career long-term climbing the corporate ladder. The big name private equity firms in the industry tend to really value hiring people who have already been pre-vetted by other big name shops. So if your main goal is to be the head of real estate at Blackstone one day, for example, starting out at a brand name institutional firm is usually going to be the most efficient path to getting there by a pretty wide margin. And if you ultimately end up deciding to pivot and you want to transition into working for a smaller organization in the future, having a trusted, established company on your resume will generally make that move significantly easier, and you'll also often be able to land more senior roles earlier on in your career just because of where you're coming from. Having major institutional experience on your resume can also give you a significant amount of credibility among investors if you plan to build your own real estate investment or development firm in the future, which can help you raise capital to fund your projects, especially if you want to bypass starting with friends and family and you want to raise capital directly from pension funds, family offices, or major private equity firms. And from a skill set perspective, working for a large organization will also allow you to learn from some of the most experienced professionals in the business, making sure you're trained from the start in the best practices of the industry. And because larger organizations are more established and tend to have much higher headcounts overall, they also tend to focus on developing specialists that are among the most talented professionals in the industry in their specific discipline. This means that if you work as an acquisitions analyst at a company that's focused on acquiring apartment buildings in the Western United States, for example, the things you do on a day-to-day basis are going to directly shape you into an expert in multifamily investment analysis and acquisitions throughout the markets that you're covering, and this lets you really dive in to one specific subject rather than spreading yourself thin across multiple different avenues. Deal flow at these larger firms also tends to be among the highest across the entire industry, since these shops tend to have the most capital to deploy or work directly with the biggest private equity firms and capital allocators in the business. And this means that in these types of companies, you're going to get reps in significantly faster than you would at a smaller organization that's only doing about 5 to 7 deals per year, and you're also likely going to see a much wider variety of transactions to strengthen your experience across many different scenarios. But with all this deal volume and experts focusing almost exclusively on their own specific disciplines, these things can also be significant downsides of working at a larger firm, and this is where smaller, leaner organizations tend to win out for certain types of people. A huge advantage of working at a smaller, more entrepreneurial company is that fewer people working within the organization usually means that you'll have more responsibilities across multiple different disciplines, which forces you to build a more well-rounded skill set and helps you become a more complete real estate professional in a way that just usually doesn't end up happening when you work at a bigger shop. Acquisitions analysts at big established organizations tend to only focus on 2 or 3 main tasks like underwriting and putting together investment memos, but acquisitions analysts at small growing startups might be involved with multiple different activities outside of their main job description like market research, due diligence, equity raises, transaction management, loan originations, and even asset management and leasing, depending on how lean the shop actually is. And the smaller and younger the company is, the greater the opportunity tends to be for advancement, with the primary focus in these types of environments generally being around what you can do for the firm rather than how many years you've been with the company, whether or not you have a graduate degree, or any other office politics or red tape that might prevent this from happening at a larger organization. Working for smaller firms can also open up opportunities to invest directly in the deals that you work on, which tends to be extremely rare or only available to the most senior employees at large established companies. And while this is definitely a big plus when you're first starting out, where this really starts to get powerful is when you start to move into more senior leadership roles, where you'll often be able to participate in the fees the company generates and even the promoted interest on deals that you take full cycle. These types of structures tend to make work a lot more fun and a lot more meaningful, since it's very clear what you're working towards and how that's going to directly benefit you financially, giving you a unique opportunity to achieve some of your own entrepreneurial goals without taking all the risk associated with starting a company. And on that note of entrepreneurship, being involved with so many different things internally and taking on multiple responsibilities within the organization will make sure you are extremely well prepared if you do decide to venture off on your own in the future, even if you have very limited resources when you're first starting out. Ultimately, there are pros and cons to each of these paths, but if I had to break it down most simply, if you want to build a career in the institutional space and don't have aspirations to go out on your own one day, or you plan to go directly to institutional capital sources when building your own company in the future, large brand name organizations can be great places to start to make those things happen. And if your main goal is to build an entrepreneurial skill set or to advance your career as quickly as possible within an existing organization to start participating in fees and promoted interest the company earns, joining a young, growing, and lean organization could be a great alternative to going the big company route. And if you are trying to land your first role in commercial real estate right now and want to make sure you have the skill sets necessary to land a job at a top firm in the industry, as always, make sure to check out our all-in-one membership training platform, Breaking to CRE Academy. A membership to the Academy will give you instant access to over 120 hours of video training on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions, sample acquisition case studies, and you'll also get access to the Breaking to CRE Analyst Certification Exam, which covers topics like real estate pro forma and development modeling, commercial real estate lease modeling, equity waterfall modeling, and many other real estate financial analysis concepts that will help you prove to employers that you have what it takes to tackle the responsibilities of an analyst or associate at a top real estate firm. And if you like this video and want to see more content on this channel on what it's like to work at different types of companies in the commercial real estate industry, make sure to hit the like button and let me know. And if you're trying to land your first job in the business, let me know in the comments where you're hoping to end up and why you're choosing that path. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.